Hello and welcome back to another Watson Brothers Team Stats video. We're here to cover the stats for September of 2023.
Hard to believe we're already now heading into the final quarter of the year. And it's probably a good thing because the numbers continue to be, I'm going to say, relatively terrible. The units listed this month was down about 5%, units sold down about 18%, and the dollar volume about 26%. We are starting to see some pressure on pricing simply because the buyers have gone and disappeared right now. There's no consumer confidence, and that is likely as a result of the interest rates that continue to move forward. Now, granted, we did have a pause at last month, and we're hoping to see what happens next month. But ultimately, people are going to have to start moving. And when they do, the issue is, are there going to be houses for them to find? And we're starting to see inventory starting to build. I mean, remember, we have been at historically low inventory levels for years now. We've been way below where this market needs to become a balanced market. So to see inventory rise is not such a terrible thing, but it's rising because there's nobody buying any of the products. So we've seen residential inventory rise about 15%, apartments about 8%, and townhomes about 18%. So we are starting to see more product coming to market and not being removed through sales.
Yeah, absolutely. So to kind of touch on that with the listings in the Okanagan here. So I think Ian covered with stats, your average single family house is taking about 51 days to sell compared to last year, which was about 30 days. So it's up, which is great. And that's where we want to make sure that, you know, sellers and buyers both have patience in the market. Buyers are waiting to see what interest rates are doing. They're waiting to see if they need to renew their mortgage, et cetera, but also to have patience as a lister or a seller, I guess. Making sure that, you know, you can't change the location of your house. You can't usually change the bones of your house. You could do a little cosmetics to kind of get it for listing. But how are people attracting these buyers is with price. That's why it's so important for a accurate home evaluation. Make sure your house is priced within the market in order to sell. Because, I mean, buyers are getting a little bit picky these days. You know, there's quite a bit more inventory coming on the market. So how can these sellers, you know, put their best foot forward? And it's always coming down to price.
We've seen some sellers do some interesting things. Some of the builders that we're working with have been offering some incentives to both the realtors and the end user. So we're starting to see a little bit of creativity in the market to try to get this thing kickstarted. And I think one of the things that, and just to build on what Avery was saying, listers have to be very creative and competitive because there are not a lot of buyers and there's a lot of listings.
Yeah.
And so what that means is you have to be competitive, but that also does create an opportunity for buyers. And we believe this is a really good time. If you're a buyer, an investor, let's just say, that's looking to add some real estate to your portfolio, my benchmark has always been a 2-bed, 2-bath in Rutland is about should be $399. At that money, at today's rental rates, you can make some dough. Right now, that rate, you can buy without negotiating, you can buy a 2-bed, 2-bath in Rutland for $420. So we're getting super close to that. If you were to look at that same property in a 2-bed, 2-bath at the lower end of the scale in the north end of Kelowna, you're about $450. In the Kelowna South area, which is on the other side of the highway, just off, I'd say on Richter Street, the starting price for a 2-bed, 2-bath is $500. And in the lower Mission, you can pick something up in the low 400s as well. So we're starting to see those properties that are really attractive to investors come down to a price that works. And then remember, last year, the government made the sweeping changes where all buildings are now rentals. So there's nothing stopping some of these units from being rented that were not rented before. So we are seeing some opportunities and we're seeing some of our investor clients contacting us and saying, is it time yet? And you know what? I think with a little negotiating, you can get down to those numbers where they really work and you can start to cash flow properties again, because rents have, although they've softened a little bit, have not softened as much as the pricing is here. So if you've got enough money to put down at a property, you can get a reasonable mortgage attached to that, pay your strata fees and your taxes, and away you go. You can actually turn that into a positive cash flow product for your real estate portfolio.
Awesome. Thanks for that information. Until next time, we'll be back beginning of the month in October. Oh, no.
November
now, I guess. Almost Christmas time for October stats. Until next time, 250-712-2222.